Good afternoon and welcome to The Closing Bell. I'm Jane Searle from TheStreet on Thursday, November 7. Today, markets ended lower as US economic growth topped expectations. That fueled speculation the Fed Reserve may cut back its stimulus program sooner than expected. Third quarter GDP was 2.8% but showed poor underlying trends. This included consumer spending, which grew at its weakest level in 3.5 years. Elsewhere, growth concerns in Europe prompted its central bank to cut rates. The Dow, the Nasdaq and the S&P 500 all closed lower. The S&P notched its biggest loss in more than a month of 1.3%. Earlier, I spoke with Doreen Mogavero of Mogavero Lee & Co.
Well, first of all, the market's been pretty frothy, as it has been the last week anyway, so this, pullback is probably a pretty normal process. But I was concentrating more on the consumer spending number, which was not very good. And I think that is more telling to me than anything else, because although you say GDP was good, it was okay. It was consensus, and I think it was, nothing really to write home about. But the consumer sentiment, the consumer spending number is something that really, and business spending also, that really sort of woke me up this morning,
And obviously we had a very strong debut for Twitter today. Do you think that stock is at risk of doing another Facebook where it may never again approach the price we've seen today?
Well, I don't think there's any way to predict that, obviously, but I think it was certainly an excellent showing for the company, an excellent showing for the New York Stock Exchange, and I think it spoke pretty highly to the fact that there's a lot of money out there and a lot of retail investors that are really anxious to get back into the market, and I think are willing, if they find a deal that they like, they're willing to put their money into it.
In corporate news, Twitter raised $1.8 billion in its IPO and rallied on its first day of trading. In earnings, Whole Foods nosedived after cutting its profit forecast. JCPenney leapt after posting its first monthly sales rise in 2 years. For now, markets are looking to payrolls on Friday. The figures could be a double-edged sword for investors. A solid result means the Fed could wind back stimulus sooner, while a weak result would mean the recovery remains fragile. Coming up tomorrow morning, live from the Nasdaq in Times Square, our John Marino will have all the overnight action from overseas, along with stories you should be watching to get your trading day started. From TheStreet, I'm Jane Searle in New York. Have a great evening.